Hello guys, it's Max here from Daily Market Movements. Today it is the 30th of October, which means it's a Saturday. Just would like to start by apologizing for not posting that video yesterday. That's why I'm posting it this morning. I'm a little bit under the weather at the moment, as you can probably tell by the sound of my voice. But here I am, I'm posting it today, one day late, so better late than never. Before we start today's video, I just want to head over to my website, dailymarketmovements.com, and just say a huge thank you to everyone so far who has joined my signal service here at Daily Market Movements over the past 2 years. I think last time I checked, which was about 30 minutes ago, we now have 1,465 traders following our service. So we're nearly at that 1,500 mark. So, for myself and the rest of the team here at Daily Market Movements, I would just like to say a huge thank you and a massive welcome to everyone who joined in the past week or so. For today's video, I just want to start by saying we are about to enter a very exciting time for the markets. On Monday, it will be the start of November, and November all the way through to January is typically and historically a very bullish time for the markets. There's some fantastic opportunities to make money. I remember last year, for those who are in my signal team, we made a significant amount of money during this time period. So I'm very excited going into next week. Let's start today's video off with the gold over the US dollar chart. So gold, very volatile day yesterday to finish off the week. We started trading up near the 1800 level. I think we had a daily high up at around 1808. And then all of a sudden we broke below that 200-day EMA, which is that blue line on your screens. And we went and targeted the 23% Fibonacci level. And we did find some support, and luckily we did get that daily close back above that 50-day EMA. The 50-day EMA currently sits at 1780, and we closed out at 1783. But very important that we got that daily close above the 50-day EMA, because this now means that we are still bullish here for the gold markets. And going into next week, I'll be looking to see whether we can go and break back above the 200-day EMA. One thing that I would say for the gold markets is that we have had a series of false breakouts towards the upside, where we have had daily closes above that 200-day EMA, but the following day we have returned trading back below it. So do be cautious here. If we were to get another daily close above the 200-day EMA, don't go putting a significant amount of money to work thinking that's it, we're now going to break towards the upside, because history will tell you that that's not always the case. Maybe wait for 2 to 3 daily closes above the 200-day EMA until you do start to buy the gold markets. On the flip side, I do want to cover the downside. If on Monday, for example, we were to open towards the downside and we broke below the 23% fib level, then I mentioned in previous videos, but then 1750 would then become the short-term target, and then eventually 1723, and my medium to longer-term target for the gold markets, which means in 6 to 9 months' time, I do anticipate a break below 1680, which is this green box here. I've been saying that for some time, but at the moment, as it stands, the gold markets are bullish. We're trading within this fib zone, and several closes above the 200-day EMA could trigger that move back up towards 1830. And if we broke above 1830, I personally believe that would send us all the way up towards 1915. Let's move over to the Nasdaq100. Nasdaq100 had a fantastic week, as I anticipated. For those who've been watching my video for some time, you will know that I closed out that trade where I gained 9% towards the upside. I cherry picked the buy position on the bottom of this trend line, and I closed it up at the all-time highs, up at 15,700. And as you can see, the Nasdaq100 is now trading at 15,838. So I got this trade spot on. If you watched my video last Monday, I come out and I said that I anticipated fantastic numbers from some of the big tech giants, and I did expect a nice run up in the tech stocks prior to those earnings, those earnings figures. And that's exactly what we've seen here in the Nasdaq100. We've seen some fantastic numbers reported by some of the biggest tech names out there. The only two that did actually disappoint was Amazon and Apple, but Nevertheless, the Nasdaq 100 has still managed to rally towards the upside. So 15,838 is a brand new all-time high that we achieved on Friday, and I do anticipate this to continue. That being said, I'd be very cautious here because the RSI is now up at 70, so I wouldn't really put much money to work up at these high levels. I've said it before and I'll say it again, wait for that pullback to take advantage of, just like I waited for that pullback here. Take advantage at the lows. This time around I was very lucky to cherry pick the bottom. That's not always going to be the case. You might enter here or you might enter here. But, wait for that pullback down towards at least a 50-day EMA and then trade it back towards the upside. So I am very bullish as we are going into this historically bullish time period for the markets here, for the Nasdaq 100. Moving over to the S&P 500, the S&P 500, very similar to the Nasdaq 100, we achieved a brand new all-time high here, which is fantastic. We're currently trading up at 4,600, so we have pretty much achieved the top of this green box that I set out. So very, very bullish indeed here for the S&P 500. Where do we go next? That's the big question. Well, just like the Nasdaq 100, as you can see on the RSI, we are approaching that overbought status. So again, I'm not going to put any money to work at these all-time highs. Do I expect, or would I be surprised if the S&P 500 continued to march higher going into next week? No, I wouldn't be surprised at all. I think it's very high. It's very highly likely for that to happen. But the way that I trade, I'm not going to be buying up here because you might be aiming to gain, let's say, 3% towards the upside, but then on the downside you're risking 5%. So the risk reward ratio is just not there for me. I'm going to wait for that pullback, which then creates value. And again, any movement towards a 50-day EMA, that's an area where I would be very interested in buying. And then I'll trade it up towards, perhaps that 4,800, 5,000 area going into the end of the year. I just mentioned over on the Nasdaq 100 that we are going into a historically very bullish time for the markets all the way through to January. So the next 3 months are typically extremely bullish for the markets. And I am very, very excited to trade this time period. And that's why it would be very beneficial to join my signal service because, as I mentioned at the start of this video, this time last year, myself and the signal team did have some significant profits. Moving over to the crude oil future markets. Now, we're currently trading at $83.28. This week, we've kind of had a breather here in the crude oil markets. And, I fully kind of expected that. Why? Well, look at the RSI. We were overbought pretty much the whole week last week. So it's normal that we've kind of just hovered around this $83 level. We did have a high earlier on in the week up at $85 a barrel. I did have a price target up at 85, up all the way up to $90. I do anticipate that we will move up towards $90 a barrel. Many big analysts on Wall Street are expecting $100 a barrel oil very, very soon, and I also expect that as well. I am still waiting for value here in the crude oil markets. I know it's very difficult when the market's just been going up for the past couple of months to expect it to fall down towards that 50-day EMA, which currently sits at around $77 a barrel. But after being a trader for many years now, I do know that these markets will pull back eventually. And so that's exactly what I'm going to wait for. I'm going to wait for that day, which will shock many traders, where we get that snapback towards the 50-day EMA, and that is an area where I would be willing to add to the crude oil markets and trade up towards 85 and then eventually $90 a barrel. So patience is the key here for crude oil markets. I am fully expecting a move down towards the 50-day EMA in the upcoming sessions. Last but not least, the euro US dollar. Very volatile day here on the euro US dollar, and that's pretty much because we had the ECB, the European Central Bank, speaking. We had some numbers out this week as well, and as you can see, we did snap up towards the 50-day EMA. This is an area where I took my profit. I did say in previous trading sessions that I was aiming towards that 1.17 area. We pretty much got there, and I closed that trade out in profit. The good news is that as soon as I closed out, we had that massive fall towards the downside, and I have now just re-entered that exact same buy position. So I've just bought down here at that 1.16 area, and I'm aiming up towards the 1.17. I'm very bullish here in the euro US dollar, medium to longer term. The risk towards the downside is that we could fall down towards that 1.14900 area. If we broke below that fib level, that's where you want to cut your losses. So right now, we've set up for a pretty nice trade. If I just draw that trade for you, just so that you can see, the reward is very attractive. If I just do a long position, here we go, and we're buying there. So you want to put your stop loss just below that next fib level, and I'm targeting up towards a 50-day EMA. So as you can see, we have a very attractive, if I just put that a bit higher, there we go. We have a very attractive risk reward ratio here. I am risking a total of 0.79% towards the downside to gain a 1.11%, and in fact you could even put that stop loss a little bit higher, so it's just below that fib level. Well, there you go. So you're risking 0.67% to gain 1.17, so it's almost a 2-for-1 risk reward ratio. But that is a trade that I have currently just opened now on the euro US dollar. So I'm going to wrap it up there. That's me concluding last week's market movements. As I mentioned at the start of this video, we are entering a very bullish time for the markets going into Christmas and then of course January. And I'm very, very excited to trade it. So if you would like to join my signal service, as I just mentioned, we have roughly 1,456 of you now following my trades, which is just great. You know, I never thought that this business would grow this fast in such a short period of time. But if you would like to join me, you can go and visit my website, dailymarketmovements.com. I've left the website link in the description of this video, and that's where you can find out more information. And if you do want to join, you can just click there, buy now, and I charge a very small fee of £249 for a year's membership. Thank you very much for watching today's video. Sorry it's a day late. I'll be posting another video tomorrow as we go into the new trading week. Happy Halloween to you all, and I'll see you all